Hey, Bulls and Bears YouTube family, thank you for joining in. Today is Monday, January 10th, 2022. We have, as usual, a lot of important economic, financial, banking system news to go ahead and get into today. And we're going to talk about this record surge in debt. Now, it seems like I've been saying that every quarter, but we're setting new record after new record after new record for people, consumers, accumulating more debt. So, can people accumulate an endless amount of debt like the government can? Do people, you and I, do consumers, do the average American people have an unlimited debt ceiling? Well, the answer is no. At some point, there will be a breaking point. Wages are not keeping up with the rising cost of living. People are getting into more debt. There's a lot of careless spending out there, of course, but even without the careless spending, just basics, people are accumulating bigger and bigger and bigger amounts of debt. It's setting new records and another explosion in debt. Let's take a look at this first article right here. Now, this comes out of Mishtalk, a very nice chart here, but you see to the far right, we see the total increase is larger than we've seen in many, many years. Now, this chart only goes back to 2017, but this is the biggest percentage increase in debt ever recorded in history, period. Now, what the bankers like to refer to debt as credit, it makes it sound not so bad. But just think about what's the flip side of credit. Well, it's debt. And you don't have to believe me. Just take a look at it right here. Investopedia. What is consumer credit? Consumer credit is personal debt taken on to purchase goods and services. A credit card is one form of consumer debt. So total debt has set yet another record increase. So at the same time that people are buried under mountains of debt, and debt increasing at record paces, the fastest ever in recorded history, we're also going to raise interest rates at this time? Do we really think the Fed's going to raise interest rates at this time when debt is already so enormous? Now, let me think about this. It seems to me the best time to raise interest rates would be when people have less debt and when people have more savings. That way they can put the savings in maybe a checking account or a CD and actually get some interest back on it because interest rates are maybe high enough. Can we get maybe a 2 or 3% return on our savings? Or is it going to stay near zero forever? So as you can see, the way things are being done right now is kind of backwards. It's kind of going to hurt people when you raise interest rates when people are buried under this enormous mountain of debt. So maybe the decision makers, maybe they just don't know what they're doing. Other people may say that this is done on purpose, that they're mean people, they're doing this, and that they're all in some back room somewhere laughing away and giving each other high fives. I don't know. I don't work for the decision makers. I don't work for the money printers. But we can see it shouldn't take a genius to figure this out here, that raising interest rates at this time with these levels of debt, it's not going to be so good. The exact date that the straw breaks the camel's back, it's anyone's guess. Why? Because they could come out with all kinds of rescue programs, and I've said it before, and I said this even before 2020. They can come out with these rescue programs. They can hand out more payouts, more checks, more stimulus. They could, cancel rent, cancel mortgages, moratoriums, etc. So no one knows exactly what type of intervention is going to happen, what type of rescue programs are going to happen. So therefore, no one can tell you when the straw will break the camel's back. Will the straw break the camel's back at some moment? At some point? Yes. Yes, it will. This will not go on forever. Now, will the decision maker, will the string pullers be crazy enough? I don't think they're sinister. I think they're nice people. I think they love us. So I'm going to say, will they be careless enough, or will they make the innocent mistake of raising rates at this time? Well, all we have to do is take a look at a few things. Now, when I say will they raise rates, it's more they're allowing rates to go up, because naturally rates should be a lot higher than they are right now. Rates right now are, and have been for a very long time, artificially low. So all we have to do is look at what the 10-year bond, which also determines the direction of mortgage rates, and we'll see if they're allowing it to rise. So let's take a look at the latest numbers in those areas. Take a look at this, and this is a boom moment. You see this huge surge right here. We're up to 1.78. We're now higher than we were in March of last year. And if you go back here to a 5-year chart, you'll see that we're the highest that we've been at in about 2 years, a little over 2 years, right? 1.78 on that 10-year Treasury yield. And likewise, mortgage rates, a multi-year high, we're at about 3.22. And if we go back, we're at the highest level that we've seen there since about April 2020. Now, with the inability to continuously refinance at a lower mortgage rates, this could and will put a lot of strain on U.S. households, because that's what a lot of people have been doing. Refinance, rates drop more, refinance, take money out, use that money to pay off other debt, consolidate debt, refinance, take money out, rinse and repeat. When mortgage rates continually go lower, that's what a lot of people do. With rising rates, what's going to happen to all these people that depended on ever lower mortgage rates? All right, so what do you think is going to happen? Here's what I think is going to happen. They will cause some disruption in the market, including the housing market. You'll probably see stocks sell off as well in a rising rate environment. Also, if they pull back on the purchases, we're talking about the buyer and lender of last resort. If they pull back on the purchases, you will see a market reaction and a correction. But how long will the correction or the drop be allowed to continue before they come back in with more easy money, more QE to infinity, dropping interest rates once again? That's my guess. They're going to see the market react, then they're going to come back and say, oh, by the way, the economy's not looking so good now. It was looking good, but now something else happened. The economy's not looking good. Now we have to come back with all these rescue packages, lower rates, you name it. All right, let's transition a little bit here. Let's talk about these rising prices. Well, it's kind of good because the average person now is starting to pay attention to how things work. Why are prices rising, right? More people are learning about the supply chain. More people are realizing how dependent the United States is on importing goods. We're an importer nation, not an exporter nation. It's been like that for several decades. Yes, we do still make some things here in the U.S., but overall, we're, for the most part, an importer nation and about a 70% consumer-based driven economy. But it's interesting right now because now is a time where people from different viewpoints, and we're talking about the left and the right, the divided people, which are largely divided, but this is something that both people can agree on, no matter what side you're on, left, right. I don't get into politics much because I think both sides are, for lack of a better word, just bad. I could think of a lot of worse words. Both sides are bad to me. Here's a recent article, though. The Fed unites left and right in warning it's behind the inflation curve. Yes, the Fed, they should have raised rates a long time ago. And that's something now that no matter what political view you have, people agree on. They see this rising price situation. Everybody's paying higher prices regardless of your viewpoints on certain topics. People altogether are feeling the crunch. They're feeling the financial pinch. They see the writing on the wall, and a lot of people are becoming scared and concerned about what's happening. So I've said this before. I think ultimately an economic correction, maybe even a collapse, is what we need to snap people out of their daze and out of their comas. Maybe people need to feel some financial pain because America, we've lived beyond our means here without many repercussions. For example, we have people living here in the United States that have never worked that live better than people that work every day, 7 days a week in some other countries, just because we're America, the land of the entitled, privileged people. And yes, you can be lazy and still live a nice life and still not miss a meal thanks to this enormous safety net that's made possible with endless amounts of debt that you never see an end to the debt ceiling. That's why. It's handouts to infinity. Americans, though, are going to start waking up and start realizing that America is not immune to economic pain. And I think a lot of us here on this channel are prepared for this. We've been expecting this, so I think a lot of us will be just fine. But watch yourself. Be careful out there, because there's going to be a lot of desperate people, a lot of people that didn't prepare, and it could get pretty dangerous out there. We already see crime rising, so be safe, be cautious. Thanks everybody for watching. Record amounts of debt. Are they going to raise interest rates, allow rates to rise? Please let me know down in the comments. Either way, thank you so much for being here. Big love, YouTube family, Bulls and Bears. Peace.